So we have already studied in our previous part about the meaning of commercial bank, primary function, and uh, agency function. Now we are going to study general utility function of commercial bank. This is quite easy, so I'll just go through once and you all can understand. We get general utility function means what we need in general requirement, means generally what we require. Locker facility, sometimes we have lots of pots of gold, so what happen, we cannot keep all those golds at home, so what we need locker facility, so that we want our things to be protected. So bank provide us that locker facility, that is for safe custody of your values, that is customers values. Fine, so they can keep all the that safe valuable things of there in locker safe. Fine, so that is locker facility. Then next is use of check system. Whenever we are making any deposit, we can definitely withdraw through checks. Now checks are of different kind: the bearer check, the cross check. Now what do you mean by bearer check? Have you seen a check which has two lines up at the corner of left? So what happened? That is a cross check. Fine. If there is a two slanting line at the corner of left hand side of your check, that is cross check. Now cross check means you will not get money straight away in your hand. What you will get? You will get in your account. Fine. And if it is bearer check, means if it is not crossed, two lines are not there at the left hand corner, so that is a bearer check. That means whomsoever's name is mentioned, okay, simply signed. So what will happen? They will get the amount in their hand there and then. Okay, bank will make the payment, cash payment. So that is cross check and bearer check. Now letter of credit. Bank also issues letter of credit for clarifying their creditability. Creditability means if they have taken a credit from someone. So what they do, they provide this facility, letter of credit. That means a guarantee letter ki yes, this fellow has that much creditability. So we assure you that. So that type of letter if a bank is issuing, that is letter of credit. Now facilitate transportation of goods. Now sometimes business consignments are there, right? So what they do, bank provide you facility to transport your goods. That means they provide you railway receipts and all, everything. So bank make those payment of consignment. If once you give direction, so they make all payment, they check out everything, they take the responsibility of the transportation of your goods. Okay. Now underwriting of securities. Underwriting of securities means selling of securities. Fine. So what they do, suppose if there is a security which has been issued by the government, okay, or public body or private bodies. Now because of full faith in bank, people will not hesitate in buying those securities. Fine. Which are underwritten, that means sold by the bank. If bank is selling, so if it is from bank, we assure that yeah, that will be genuine one, otherwise we feel like it can be a fraud. Fine, so that is underwriting of securities. Next is collection of statics, foreign exchange business. Now collection of statics, that is sixth point. Now what do you mean by collection of statics? Bank also collects statics. What is that? Data of what? Trade, commerce and industry. Now some bank publish the magazines and all related to that. Fine. Now last is foreign exchange business. Now banks also deal in foreign exchange business. They may finance foreign trade by accepting or collecting foreign bills of exchange. So I have already explained you bills of exchange, foreign bills of exchange. That means if we have drawn such kind of bill on any outsider, that is the business personnel living beyond the boundaries of the country. So such kind of bills also are being entertained by bank. Okay. Now we are going to go through a very important topic, that is credit creation process by commercial bank. First, let's understand the meaning, then I will make you understand what actually the process is. The word credit means what? Credit means I believe. Okay, so do remember, credit is derived from a Latin word, that is credo, and which means I believe. Okay, thus credit means trust or faith. Okay, so anyone, if they are giving you credit, that is trust or faith, with faith. Now it is by creating demand deposit while giving loan that commercial banks are called creators of money. What do you mean by creators of money? That means they are making money out of money. Okay, so we say we are producing from one goods to another, that means from raw material to goods, we are doing that. But what they do, what bank do? Bank do create money from money. That means whatever you deposit, from that money they make their money. Okay, so that is why they are known as creators of money, or you can say credit. Fine. Now what actually credit creation process is, it is very important to know the basic concept. But before that, we have to understand what are the concept, means what are the new terms which we are going to come through in credit creation process. Now here we will come through with two types of deposits. Now what are the two types of deposits? Generally whenever we ask such kind of question from children, what children say? Ma'am, two types of deposit. Maybe we don't have two types, we have three types of deposit, and they used to say saving deposit, and when we have current deposit. Sorry beta, those are accounts. Okay, saving account, current account, recurring accounts, those are accounts, those are not deposits. Now two types of deposits are primary deposits and secondary deposit. You can even call secondary deposit derived deposits. Fine. Now primary deposit means what? Primary deposit means initial deposit of cash which is being made by the people. Okay, so if I am opening my account in a bank first, saving account, and I am making any deposit for opening that account, that is known as primary deposit. Am I clear? Now secondary deposit. Secondary deposit, or you can say derivative deposit, are deposits which arise on account of loan given by the bank. Now here I am not opening my account. Bank open my account. Why? Because I have taken loan from bank. And what is the process of bank? Bank never ever give you straight away cash in your hand. What they do, they transfer it. Even if they are giving loan, they will transfer that loan amount in your account. So you are bounded to open up your account, loan account. Now that loan account is derivative deposit, or you can say secondary deposit. Fine. Now what is the third term which we are going to come through in this is LRR. Now what is LRR? LRR is legal reserve ratio. Now what is legal reserve ratio? Legal reserve ratio means minimum deposit which bank has to maintain. Now we know very well all the depositors, they do not withdraw at the same time. Fine. And full amount they are not going to withdraw. Why? Because they have foundation. If you will talk to your parents, they will tell you that minimum balance they have to maintain in their accounts in bank. Okay, so complete withdrawal they cannot go for. Now this is what, when they are keeping the minimum balance or when they are not withdrawing completely, that is LRR, that is legal reserve ratio. Now this reserve ratio bank has to keep with them. Am I clear? Now next is money multiplier. Now money multiplier means what? Money multiplier, this is what I said. Bank is what? Bank is money multiplier. What they do? They take primary deposit from bank, and with then what they do, they keep LRR, that is reserve a fraction of your amount as a cash reserve. Rest of the amount, suppose my LRR is 10% or 20%, whatever it may be, depends on bank whatever they have fixed for. Now what they will do, whatever is the primary deposit, from that they will take out LRR, okay, and rest of the amount means whatever remains after the reduction of LRR, that they issue as a loan. Okay, now they keep on doing and doing and doing. That I will explain you through proper what we say proper statement. I will explain you that, don't worry. But then what they do, they go on keeping loan, again keeping few of the amount as a LRR, and then ultimately this money keeps on multiplying. Okay, so that is what we need to know, ki what actually, how much amount they will multiply. So what is the formula for money multiplier? Money multiplier formula is 1 upon LRR, that is legal reserve ratio. Now if my LRR is 10%, so it will go 1 upon 10 upon 100. Then you know very well, we reciprocate it. Reciprocate it means 100 will go up. That is 1 into 100 upon 10. So that means what is my money multiplier? That means how many times the bank will multiply the money? 10 times. Okay. So my money will be multiplied 10 times from bank. Now how? This I will explain you. Now can you see this table? See here in the table they have explained what is primary deposit. Fine. Suppose I have one person has an account in Punjab National Bank. Okay. So they have deposited. Now I have opened up my account in Punjab National Bank and I have deposited 1000 rupees. What is my LRR? My LRR is 20%. Now 20%, that means 20% of 1000. Fine. Now if I'll take out 20% of 1000, just calculate how much it will come. That means 200. So what is my required reserve? That means what is bank's required reserve? Bank's required reserve is 200. What I'll do? I will reduce 200 from 1000. So what is the amount which is remain? 800 is the amount which will remain. Now I give this, the bank give this 800 to Ramlal. Ramlal has his account in Canara Bank. Okay, so now 800 will be transferred to which account? Ramlal's account in Canara Bank. Fine. Now this 800 again they need to keep LRR 20%. Now if I'll calculate 20% of 800, it will come 160. That is 160 required rate of reserve. Fine. So if I will reduce, what will be the amount which will be left out with Canara Bank? Canara Bank के पास कितना पैसा बच जाएगा? That will be 640 rupees. Now what this 640 rupees? This is the amount which I will give as a loan to anyone. Fine. So now Canara Bank will give this loan suppose to Mohanlal. Mohanlal has his account in Bank of Maharashtra. Now 640 ka again 20% legal reserve ratio. Why? Because bank has to keep they are mandatory. It is mandatory for them to keep legal reserve ratio of 20%. Now 640 ka 20% is 128 rupees. Now again I will reduce this 128 rupees from 640. If I reduce it, what will be the reduction amount? That is 512 rupees. Now this, what is this 512 rupees? That is the amount which has been left for loan. Now Bank of Maharashtra will give this amount as a loan to any. Suppose it has been given to Girdhar Lal. Now this will go on and on and on. But where they will stop? They will stop till the required reserve ratio becomes 1000. 1000, that means equivalent of first primary deposit. Now what is my first primary deposit? 1000. Fine. So that is why my required reserve ratio, when it will be added up, that means touch to 1000, total up to 1000, their bank will stop. Why? Because now they cannot multiply this amount more. Fine. So if you will keep on calculating, just check out till 1000. Required reserve should be and by 1000, that means total up should come to 1000. Now when it will when the total up will come 1000, what will be the deposit? Primary deposit will total up to 5000. Same way secondary, that means loan amount will end up to 4000. So what is the difference between 5,000 and 4,000? 1,000. So this 1,000 is what? This is the amount which bank has achieved. That means you can say that is they have earned. So can you see how many times they have multiplied? 5 times. Your 1,000 rupees has been multiplied 5 times. So I hope it is clear what is the money multiplier. Fine. So this was the actual term which you will understand. Even if you will calculate money multiplier 1 upon LRR, so you will find out that is 1 upon 0.2. 0.2, you know, that is 2 upon 100. It will go to 0.2. You know it will multiply 10 times. We have already calculated, that is LRR. It will be multiplied 10 times. So 1 into 10 upon 2, which will give you 5. So this is what your money multiplier is. Am I clear? Do remember, you can get, I will just now put in front of you one example also, so that the things should be clear to you all. Do remember, we observed that the initial deposit of cash was only 1,000, whereas total money supply in the economy is increased by 5,000 in the form of what? Demand deposit. So the value of money multiplier here is how much? 5. Okay. So total demand deposit is what? Money multiplier into initial deposit. That is 5 into 1,000 equals to 5,000. Do remember, total demand deposit equals to what? Money multiplier into initial deposits. That is 5 into 1,000. Now this is the example which I have already given to you, how to calculate money multiplier, right? From the example which is, we observe that the initial deposit of cash is how much? 1,000, whereas total money supply in the economy is increased to how much? 5,000 in a form of demand deposit. Now how this money increase? Now what is actually amount of money multiplier? That means how many times it multiplies? 5 times. How you will calculate this? So how you will calculate what is my LRR? LRR I already said, that is 20%. 20%, that is 20 upon 100, which you can say 0.2. So what was the formula which I have given for LRR? 1 upon LRR. So 1 upon LRR, that is 1 upon 0.2. So that is 1 into 10 upon 2. I hope you understand how I make that 10. You will remove this decimal and you will put into 10. So ultimately it will come to 5. So what is my money multiplier? 5. And total demand deposit, what is the formula for total demand deposit? Money multiplier into initial deposit. That is 5. What is my money multiplier? 5. What is my initial deposit? First deposit, that is 1,000. So 5 into 1,000 ultimately will give me 5,000. I hope it is clear now. Now at the end, few important points or few important topics which you should study for your exam, that is differentiation between demand and fixed deposits. Now what are demand deposits and what are fixed deposits? Demand deposits can be withdrawn by their depositor at any time without notice. I hope you remember, I have already explained you demand deposit. Demand deposit is a deposit which is being made in current account. It is also called current account. Now what is fixed deposit? This is the amount which has been fixed by the customer, or you can say by the people. Now you can withdraw this only after the expiry of certain fixed period of time. Okay. Demand deposit, they are checkable, or you can say you can withdraw this through check. Now this fixed deposit you cannot withdraw through check. Why? Because this you can withdraw after the completion of the term. Fine. In case of demand deposit, or you can say current account, no interest is being paid on the deposit. Rather, sometimes depositor have to pay to the bank for their services. Whereas here, these deposits carry high rate of interest. These deposits constitute a part of money supply. Why? Because any number of amount can be deposited and withdraw. So that is why it is a part of, or you can say constitute a part of money supply. Now they fall under the category of near money or liquid assets. Liquid assets means the asset which you have for your future. Okay, so this is the differentiation between demand and fixed deposit. Now after this you can see the functions of commercial banker chart. Now prepare this chart in your copy. The reason behind it, if you will prepare this chart, it will be very easy for you to remember. So you can see the function of commercial bank. It is divided in three parts, that is primary function, agency function, general utility function. Primary function is accepting deposit, advancing of loan. Agency function is transfer of funds, collection and payment of credit instruments, and so on. So all the best. This was the end of the video. The chapter is over. Do understand the things. Very important part is credit creation process. So you can proceed with your studies through this. Fine.